Are you looking for the best investments with interest that grows over time? You've come to the right spot. You probably already know that compound interest can help you make more money, but you might not know which kind of accounts can help you make the most money. Compound interest is the key to building wealth, getting rich, and maybe even becoming a millionaire. Hello and welcome to today's video, where we will discuss the best investments that will earn you compound interest. If you want to make more money passively, stick around to the top 3 ways of the video since these offers are more favorable. Let's get going. Number 10. Real estate investing. In the last spot, we have real estate investing, which offers a variety of opportunities to increase your wealth. Your investment portfolio may benefit greatly from diversification and inflation protection via real estate. Real estate speculators have earned fortunes when house values rise, and you can too. My preferred way of investing in real estate is via crowdfunded platforms, since you can get started with only $10, which is 100% passive. This kind of investing works by combining funds from other investors to buy huge real estate assets in which you'll possess a minor stake. This implies that you don't need millions of dollars to invest in apartments. That way, you can start earning passive income compounded by gaining money. Number 9. REITs. A less complicated way to enter the world of real estate investing is via real estate investment trusts. Real estate investment trusts behave similarly to many equities, except that real estate is their primary industry. All of this is done for you instead of having to manage property, collect rent, and maintain a property. Your money isn't linked to a single property since REITs might hold hundreds or thousands of different properties. Like dividend stocks, you'll earn a percentage of the profits when you invest in a REIT. Investing in REITs may be a low-risk, effective strategy to further diversify your portfolio. Since REITs are traded on the stock market, you may make this investment and earn compounding returns using an investing tool like Acorns. 8. Invest in real estate debt. Although it's sometimes disregarded, this kind of real estate investment may be a fantastic method to diversify your portfolio and make compound interest. Using a platform like Ground Floor, you may invest in short-term real estate loans. These financial obligations are employed to complete a real estate investment. These are mainly used when flipping homes or other real estates. For instance, you may utilize a platform like Ground Floor if you are attempting to flip a house but need an extra $10,000 to finish the job. This may be a fantastic way for investors to expand their capital. It's a good choice for any investor wishing to profit from compound interest since you can get started with as little as $10. Number 7. Rental property. One popular way to invest in real estate is by buying a rental property. This method will require the most capital and work to start, but it is also one of the more profitable methods. Make sure you have the resources and expertise to achieve the value you're looking for before investing in rental homes. You must determine how much money you have to spend, investigate the region where you want to buy your home, and learn the going real estate rates for houses of a comparable value. If you own real estate, you might decide to work with a property management business to assist you with requests for maintenance and other services. There are several types and sizes of rental homes. To increase your wealth, you may choose a residential property like a single-family house or a duplex, or you might look into commercial real estate. In any case, investing in real estate may be a great strategy to grow your money and hit even 6 figures. 6. Savings accounts. A fantastic strategy to increase your compound interest monthly is via a high-interest savings account. Additionally, a savings account is quite secure since the danger is minimal. You may utilize a variety of online savings accounts to earn compound interest. Why not sign up for a high-return savings account, as they sometimes pay about 10 times what regular savings accounts will? The majority of savings accounts have a pitiful national average interest rate of 0.06% as per bank rate. This implies that you would only get $6 interest if you had $10,000 for a full year. Although this is free money, you would really lose money due to inflation. The variable interest rates that savings accounts pay are one of its drawbacks. It is feasible for them to reduce the amount of interest you'll earn depending on the state of the market and the bank you deal with. There may be charges for certain savings accounts. While the majority don't, always be alert for unstated costs. Although these costs are often avoided and may not have a significant financial effect, learning about them in advance is always advisable. Additionally, many savings accounts provide enticing welcome bonuses that might total more than $1,000 in free money. Do some exploring if you haven't already. Savings accounts are fantastic choices for people who have a low risk tolerance and will need their money soon. Opening a high-return savings account with any bank is a no-brainer, whether you're saving money for a down payment on a house or a new automobile. Number 5. Mutual funds. Mutual funds are an additional alternative for stock investment. Although they have somewhat higher fees than index funds and ETFs, they are comparable. They may also include other resources, including real estate. Mutual funds are often handled more aggressively. This indicates that they have a fund manager who actively chooses which assets to buy and sell for the fund. The fund manager's objective is to exceed average returns. The greater returns will often be countered by higher fees. An excellent strategy to increase your compound interest investments is via mutual funds. Number 4. Dividend stocks. You may consider buying dividend-paying companies to increase your compound interest when choosing individual equities. Compared to growth stocks, dividend stocks are often less exciting and more mature than other stocks. Many businesses start paying dividends to shareholders after they have reached their peak and their development has slowed. This is done to transfer their earnings to shareholders. Depending on the company's performance, shareholders may get dividends regularly. Although quarterly dividend payments are the norm, certain companies also pay out dividends monthly or yearly. Before we get to the top 3 of our video, we would like to thank you for reaching this far. If you are enjoying this type of content, a sub to the channel and a like to the video will be highly valued. Having done that, let's continue. Number 3. Crowdfunded real estate. This kind of fund pools different investors' money and invests it in national holdings of intangible real estate. Some are rental homes, while others are actively being flipped, generating income differently. It can include purchasing real estate to generate a profit, or it might entail purchasing a product, refurbishing it, renting it out for a period, and then selling it later to reap the benefits of asset growth. The great thing about crowdfunded real estate is that it is often far less costly than making a real estate purchase. For instance, if you want to buy a rental property, you'll need around $100,000 to pay the purchase price, closing costs, etc. But if you use this method, you can invest any amount of money. Number 2. ETFs. ETFs provide among the lowest management costs available to investors, but also have a few additional advantages. Similar to index funds, this investment has a high degree of diversification, which lowers risk. The lesser initial investment is another fantastic perk. While investing in certain index funds might cost thousands of dollars, most ETFs will only cost a few $100s or less. Even better, you may acquire fractional shares via several online brokerages to further reduce the price. ETFs are available in a wide range of industries, including those for commodities, bonds, overseas stocks, and many more. With an average yearly return of 10%, ETFs are a great compound interest investment to increase your money in the stock market. And number 1. Bonds. In the number 1 spot, we have bonds, an easy and low-risk approach to creating compound interest. You may think about buying treasury, municipal, or corporate bonds, among other bonds. The safest investments are government bonds, which also offer the lowest interest rates. Municipal bonds are likewise quite secure, although their yields are modest. The riskiest bonds are corporate ones since they carry a higher interest rate. You may invest in a bond fund to increase your passive income and produce compound interest, such as an index fund. It should be obvious at this point that compound interest can make you very rich if you invest consistently over time. There is thus no reason why you can't utilize your assets to fulfill your own financial objectives by taking into account your own unique circumstances and exercising some patience. That being said, which of these types of investments do you think is the most suitable and why? Please tell us in the comments. That marks our time. Thank you for watching, and until the next one, stay tuned.